Hello, my name is Doug Pless. I'm a full-time trader and a SpotGamma content contributor. This presentation is a case study that shows how to use a variety of SpotGamma tools to find and plan a trade in a stock. The stock selected for this case study is Microsoft, showing an intraday trade on December 20th. I have a two-step process for trading. The first step is planning. I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. The second step in my process is execution. I watch how price reacts at key gamma levels, real-time order flow, and real-time market maker hedging flow to confirm my thesis and for setups. Let's look at how I use this process to get from planning to execution for a trade in Microsoft. The setup that I will cover is based on the positional analysis of Microsoft. This setup can be taken with stock shares, single options, or option spreads. Position duration or time frame could be intraday or longer. For this case study, my instrument is stock shares and my approach is intraday. Here's the agenda for this presentation. First, I will go over a brief overview of Microsoft. Next, I will cover my planning process, how I use SpotGamma tools for positional analysis, and how I develop a thesis. Then I will discuss trade execution for the case study. I will briefly go over alternative trades with options. Finally, I will review the key takeaways for this case study. Microsoft is one of the Magnificent Seven stocks: Apple, Amazon, Google, Meta, Microsoft, NVIDIA, and Tesla. Microsoft is in the technology sector and the software industry. Microsoft develops operating systems, business software, and applications for servers, personal computers, and intelligent devices. Most important for traders, Microsoft is a liquid stock that has very active options. For pre-trade planning, I look at the following data. First, I look at SpotGamma key daily levels and how they change from day to day. Are traders looking for, accepting, and positioning themselves for lower or higher price levels? For example, if both the put wall and call wall move higher, this indicates traders are looking for, accepting, and positioning themselves for higher prices. Also look at several charts in Equity Hub that show the key gamma levels and how gamma and volatility change with price and time. I look at the HIRO indicator, which is part of my execution process. Before moving on to my planning process for this case study, let's briefly look at some background information and explanations of these levels and charts used in the case study. The key daily levels are available in Equity Hub and are updated every day. They are proprietary to SpotGamma. The key gamma strike is the strike with largest total gamma. The hedge wall is the level where the largest change in gamma is detected. It is considered a major support or resistance level. The call wall is the strike with largest net positive gamma. It can act as resistance, since market makers will most likely have to increase delta hedging at this level. The put wall is a strike with largest net negative gamma. It can act as support. There are a variety of charts available in Equity Hub. They are also proprietary to SpotGamma and updated daily. I'll look at two key charts for intraday trading. The composite view chart shows the rate of change in gamma at different price levels. A high SG acceleration indicator indicates gamma changes more rapidly at that price level. It also indicates higher expected volatility. The SG acceleration indicator is shown on the vertical axis and strike price on the horizontal axis. The put and call impact chart shows the amount of put and call gamma at different price levels. This chart provides a clear visual representation of the put versus call domination at different price levels. The steepness of the lines also shows the rate of change of gamma. The steeper or more vertical a line, the higher the rate of change of gamma and volatility at that level. The SpotGamma HIRO indicator shows the market maker hedging impact of options trades. It is also proprietary to SpotGamma and updated in real time. This chart is part of my execution process. Market maker hedging flow can have a significant impact on price. This chart shows calls and puts separately. The white line shows price. The orange line shows calls. The blue line shows puts. A rising orange line indicates traders are buying calls. A rising blue line indicates traders are selling puts, and vice versa. This is the HIRO chart with tape flow data in the bottom drawer. The flow data in tape provides real-time information on options transactions as they take place, including buy, sell, call, put, strike volume, open interest, expiration date, and size. Tape complements HIRO by highlighting high volume activity and helps traders quickly see trends and impactful trades. Tape is available on a separate page or in the bottom drawer below HIRO as shown here. Please see the SpotGamma Support Center for more information on these levels and charts. SpotGamma provides several different ways to find stocks to trade. I like to trade the same large cap tech stocks, so I have a watch list in the SpotGamma dashboard of these stocks and a few others. You can also search for stocks with scanners in Equity Hub. You can look for trending stocks in HIRO. Finally, you can rank stocks by HIRO signal. Let's move on to the positional analysis for Microsoft. These two tables summarize the SpotGamma key daily levels for this study that were shown in Equity Hub on Thursday, December 19th and Friday, December 20th. Green numbers on the right indicate the value increase from the previous day. The table on the right shows the put wall moved higher from the previous trading day. The data in the tables in the previous slide comes from history on Equity Hub. History shows the changes in the key daily levels and other metrics for the last 10 days. History for Microsoft showed a move higher in the put wall on December 20th. History also showed 35.74% gamma was set to expire at the end of the day. This was the monthly options expiration for December. The put and call impact chart for Microsoft from Equity Hub showed more put notional gamma, that's the blue curve, than call notional gamma, that's the orange curve, below the 450 call wall. This indicates puts were driving the price action for Microsoft below 450. The steeper lines between around 400 and the 450 call wall showed that call and put notional gamma would change quickly between these levels. It also showed that call notional gamma, that's the orange vertical bars, was dominant above 450. The composite view chart for Microsoft from Equity Hub showed the closing price for the previous day was at 437.10, just below the hedge wall at 437.50. The darker colors indicated very large option size, and that puts, that's the red shading, were driving price action below the 450 call wall, and calls, that's the green shading, were in control above that level. The SG acceleration indicator showed that the rate of change of gamma was below the highest level shown on the chart and would begin to increase as price moved down toward the 420 key gamma strike. Above the hedge wall, the SG acceleration indicator showed that the rate of change of gamma would decrease as price moved higher. Based on this information, the shifts in the key daily levels, and graphical views of gamma, I develop a thesis and a plan for the day. Here's my thesis for this case study. I was looking for high volatility based on the high rate of change of call and put notional gamma between around 400 and the 450 call wall shown on the put and call impact chart. I had a directional bias of bullish for the following reasons. First, the put and call impact chart and composite view charts for Microsoft showed that puts were dominant below the 450 call wall. A large amount of gamma was expiring at the end of the day, the December monthly options expiration. I was looking for Microsoft puts to expire and for the stock to move higher. When traders are long puts, market makers are short puts and short stock to hedge their delta exposure. As puts lose value due to an increase in the price of the underlying and or the effects of charm, that's a change in delta with the passage of time, and Vanna, that's a change in delta with a change in applied volatility, market makers' delta exposure drops and they can start to buy back their short stock hedges. Also, the put wall moved higher from the previous day. Finally, according to the SpotGamma AM Founders Note for December 20th, and I quote, "We are looking for ways to express upside into year-end. This is due to oversold conditions. i.e. very elevated IVs, and the removal of large put positions with today's OPEX, options expiration. Here's my plan for this case study. I plan to watch HIRO in the first 15 to 30 minutes to observe market maker hedging flow and to see how market makers were positioned and how those positions were changing. If traders started buying calls and or selling puts, or if Microsoft traded lower to the put wall and reversed higher, I plan to look for long setups. On Friday, December 20th, Microsoft gapped down and opened at 433.11. Traders immediately started selling calls, shown by the falling orange line on the left side of the HIRO chart. A few minutes later, traders started buying puts, shown by the falling blue line. Microsoft traded down to the 430 put wall and lower, and then chopped up and down around 430 until a few minutes after 10 a.m. Eastern Time. At 10 a.m., traders abruptly stopped buying puts, shown by label 1A on the chart. A few minutes later, Microsoft reversed higher at the 430 put wall, that's a label 2 on the chart, and traders started buying calls, shown by label 1B. When traders buy calls, market makers take the opposite side of the trades and sell calls. Since market makers want to remain delta neutral, they had to buy stock to hedge their delta exposure. Microsoft continued to rally while traders bought calls and later started to sell puts. Around 11:40 a.m., a flow alert, that's the first label 6 on the chart, signaled significant options activity and a potential reversal in hedging flow from positive delta to negative or neutral delta. A HIRO call peak pattern, that's the first label 7, formed, and the rally began to slow. Microsoft stopped moving higher and consolidated when traders stopped buying calls and selling puts. A second flow alert and call peak pattern, that's the second labels 6 and 7, appeared around 12:30 p.m., and Microsoft began to reverse lower. This was the time to exit any remaining long positions. The next two HIRO charts show details of flow data at 10 a.m. with tape flow data in the HIRO bottom drawer. The first chart shows that traders were buying puts and selling calls until 10 a.m. The second chart shows traders were buying calls and selling puts after 10 a.m. This flow data helped to confirm the shift in hedging flow from negative to positive delta and the reversal higher at the 430 put wall. The order flow for Microsoft is shown in the Bookmap chart. The volume dots show market buy minus sell orders. Green volume dots indicate more buyers than sellers. Magenta dots indicate more sellers than buyers. The heat map shows a history of limit orders in the order book. Dark orange and red lines indicate a higher number of orders. That's high liquidity. Orders above current price are limit sell orders. These orders can act as magnets for price, like the limit sell orders at 435 and 440. These levels were price targets, shown with label 5 on the chart. The order flow for Microsoft is shown in the Bookmap chart. The volume dots show market buy minus sell orders. Green volume dots indicate more buyers than sellers. Magenta dots indicate more sellers than buyers. The heat map shows a history of limit orders in the order book. Dark orange and red lines indicate a higher number of orders. That's high liquidity. Orders above current price are limit sell orders. These orders can act as magnets for price, like the limit sell orders at 435 and 440. These levels were price targets, shown with label 5 on the chart. The reversal higher at the 430 put wall, just before 10:15 a.m., is shown with a label 2 on the chart. After the break above 430, Microsoft moved higher as traders continued to buy calls and aggressive traders continued to buy shares. Around 11:45 a.m., traders stopped buying calls and aggressive traders began to sell shares. Microsoft moved a little higher until traders started selling calls around 12:30 p.m. There were several opportunities to enter long positions in the first 3 hours of trading. Potential entries are shown on the chart with label 3. The day played out as expected. Higher volatility with a bullish bias. The hedging flow for the entire day is shown on the HIRO chart, and the price action is shown on the next Bookmap chart. Traders abruptly stopped buying puts at 10 a.m., and Microsoft broke above the 430 put wall as traders began buying calls a few minutes later. The put wall acted as support, and Microsoft reversed higher. Traders continued to buy calls, and Microsoft rallied until the second flow alert and HIRO call peak pattern. This marked the high of the day as traders stopped buying calls and started selling calls and buying puts. Microsoft closed at 436.60. There were several ways to play the move higher with options, including buy a call and selling a put spread. Here are the key takeaways for this case study. First, the large amount of gamma expiring at the end of the day provided a solid foundation for a bullish thesis. The 430 put wall acted as support as expected. HIRO provided a clear signal that traders were taking positive delta positions, buying calls, and market makers were buying stock to hedge their delta exposure. Tape flow data helped to confirm the shift in hedging flow from negative to positive delta and the reversal higher at the 430 put wall. Finally, the second HIRO call peak clearly marked the high of the day. That wraps up this case study. Thank you very much for watching.